How's it going, everyone? It's Sam. Today we're talking about DraftKings, and I've never really talked about it before, but I am bullish on it, and I think I will be investing soon. So I'll walk you through the company, what short-term catalysts it has, what long-term catalysts it has, and where I'm sitting on it, how bullish I am. So if you guys like this, please leave a thumbs up. I really appreciate it. Also, hit subscribe if you haven't already hit that. We are on the road to 35,000 subscribers. Maybe we've already passed it by the time you see this, but we are pushing forward. Also, if you want to see exactly what I'm buying and what I'm selling in real time, we've been able to pick out a lot of stocks that have done really well, 20, 30, 40% up in a day, even up to 86% up in a day on some individual positions. So if you want to see what I'm buying, what I'm selling, and get in on a group that is 450 strong of really smart investors, you can check out the link down below to Patreon. Also, there is some exclusive content in there for some of my Patreon members. So if you want that, definitely check that out. Also, last thing, if you want 4 free stocks through WeBull, you can sign up below. They're running it just through Monday. So that's what they told me at least. You can check that link out and get those free stocks. Get 4 of them if you deposit $100. So I really appreciate that. And let's get into the content. So DraftKings is up. It moved up 5% on Friday. And this is because of some pretty big news in Canada that came out. So overall, it's been pushing up since about, late October. It's up about 50%. So you are buying it at a little bit of a premium to where it was before. But if you look here, they rose on Friday because Canada, a day earlier, had introduced a bill that would legalize or decriminalize betting on a single sports game. So this is going to open up a big part of the industry for them. This is about a $10 billion yearly market for them. So sports betting is about $10 billion in Canada. Right now, you can see the bill would likely boost revenue in Canadian casinos, chip away at the illegal gambling, and help the nation compete with the U.S., where the legal sports betting market is opened up. Now, DraftKings wasn't commenting on this. We don't know exactly what's going to happen. We think that they're going to push in because DraftKings is the biggest, or it's the most well-known online sports betting company. They also were able to raise their forecast. So they gave out their Q3 results recently, and they raised their guidance to about $450 million or so from a range of about $500 to $525 million in revenue for this year, which is really good in a year that sports were gone for a good portion of the year, and they had to overcome a lot, right? So they jumped a pretty good amount after they had originally announced this. They had losses, but they beat expectations on losses and on revenue. This was a huge increase in monthly players. So they had a 64% increase from last year. This has really pushed them forward. And they have some really big partners here too. You can see they spent millions last quarter with partnerships, including Michael Jordan in an equity deal, which is huge. I mean, he's probably the most well-known athlete maybe of all time, and he owns part of this company now. Also with the New York Giants, Chicago Cubs, ESPN. There are states that are opening up to this. We're still not even at 20 states that have opened up to DraftKings, but this is going to be really interesting as time moves on. I think this is a company that could definitely push up because, again, it's $50 a share right now. I could definitely see it moving up a lot from where it is now. Now, investors and analysts are saying the same thing. I mean, I've heard a lot of people being bullish on DraftKings. You can see here that the high price target is about 100, median is about 60, low is 39, but the average is about 60 per share, which would mean a pretty good upside from where it is now. That would be about 15% upside, and I think it will push up more than this, especially with what we've seen with growth companies recently. Now, they do have a very large addressable market. The total market addressable for the whole world is about 70 billion, and that is right now. Obviously, that's not in the future. Something that I think is really interesting is here you can see the global gaming market. So you can see this $456 billion. A lot of it's in lotteries, a lot of it is at the casino, and then gaming, slots, and machines. And then look how big sports betting is. 16%. It is right up there with gaming machines and slots, getting close to lotteries, and you can see how it's increasing. The total online is going up too. So you can see that online is becoming a bigger and bigger part of it. So it went from 9.5% about 5 years ago to 12.2. I mean, especially in a world where the pandemic exists where people are worried about going out, this, especially in the aging population, right? You can see here that they are expecting down the road to hit about $3 to $4.5 billion in revenue. At least that's the opportunity for them. Now, they are trading pretty expensive where they are now. They're trading at about 21 billion. So the thing is, I think this is an expensive stock. It is trading even at a matured price to sales ratio of about 6. So after it's able to get up to, let's say, $3.5 billion or $3 billion a year, that is a pretty high price to sales ratio. But their margins are going to be very high because it doesn't take a lot to run, right? I mean, think about a casino, and then if you took everything out of the casino and just had them do it on their computer. So they actually have a graphic in here. They're expecting about a 67% reduction in cost as time goes on. They are expecting it to be a very cheap way to make money. I mean, a high margin business. They are expecting really good growth. So they're expecting about 30 to 40% year over year growth from here on out. And a lot of people ask me, when is a good buying price? When's a good time to buy in? I think that this is a company that I'm just going to buy for the long term. A lot of these companies that we've been investing in recently have been bursting like crazy. In a few days, we're getting 30, 40, 50, 60, 70, 80%. You are spending a lot of money on this company, overall price to sales ratio and everything, because right now it's only looking like it's going to make about $500 million a year this year. So it is trading at a price to sales of about 40 right now, but it does have a good growth rate as we start to legalize it in more states, as we start to move outside of the country into other countries that are opening up and legalizing this. I think we're going to see a lot of mini boosts like this 5%, right? I mean, think about some of the big states in the US where we're not even legalized in most states. We're not even legalized in half the states in the US. As more open up, I kind of see it like legalization for MJ, right? I have to be careful what I say here because sometimes I get demonetized if I say words that are controversial, at least controversial in YouTube's eyes. So I think it's going to be one of those things. As things become legalized more and more, we're going to see all these 3%, 5%, 10% bumps in price. As we start to see that, we're going to see bigger and bigger revenue numbers, more and more R&D, more money in marketing. It's just going to expand exponentially, at least until we start to hit the edge of the markets that we're growing into, right? I mean, we're still on the front end of all the markets that we can jump into for DraftKings. So I think this is going to expand pretty quickly. It's going to be one of those things where, of course, I could wait or try to wait until it falls down, but take a look. Over the last month, do you see it really dropping down much? No. I mean, here you have a little bit of a pullback, 6%. Over here, you have a 3% pullback. Right here, you have a 1% pullback. It's been pretty much straight up. And I could see this continuing to run if I don't buy in. So again, I haven't bought into this company before, but we've been buying a lot of other good stocks too. So I can't really complain, but I think this is one of those companies that I'm going to hold on to and look back 5-10 years down the line and look and say, wow, it tripled, quadrupled in the last 10 years. I could see this going up to $200 a share. I mean, that would be about an $80 billion company, assuming we are legalizing more and more states and we are able to bring in more and more revenue, really high margin business. I could be wrong. Do all your own research. It could fall down to 35 next week. Maybe we have another pandemic and maybe there aren't sports going on, but I don't see that being super likely. I think we've gone through enough of this that there will be sports. A lot of these big companies don't really want to lose out on the money from sports and sporting events. They will figure out ways to quarantine if necessary. A lot of the athletes want to continue making money. So I think this is something that's pretty likely to continue. And in an age that we are going more and more online, I think it makes a lot of sense. So I will probably be building out my position over the coming weeks. But if you want to know exactly what I'm buying and what I'm selling, you can definitely check out my Patreon down below. Again, I'm going to be posting exclusive content. It's not really because I'm trying to keep it away from anyone else. It's just there's some stuff that I can't post on YouTube because most people won't like it. It doesn't appeal to enough people, but it's really valuable. So definitely check that out if you haven't already. I appreciate it. Thank you guys so much. And again, thank you for hitting the like button and checking out WeBull. And if you want to see a video on another stock that's really interesting, it's a SPAC stock in the EV sector, definitely check out this video here. Thank you.